Pleasure. Thank you. Thanks, guys, for making it until 5:45. Although this presentation is supposed to be 45 minutes long, you're lucky if you leave here at 7 p.m. Okay, so I hope you had a late lunch, a lot of drinks and coffee and this and that. They say the market doesn't sleep. Why not? How many of you are trading FX right now? All right, good. How many of you have never traded currencies before? Have never traded currencies before? Wow, and you still have the courage to raise your hand. And you're still here in the last session of the day. That means you really, really want to learn, or you're here because a loved one dragged you, or. So, okay, very good. So I guess the majority of you are trading. Excellent. All right, guys, this is 45 minutes, right? So we should be done by 6:30. The beautiful thing about this, if you're the last one, you know, you're the last one. You're not stepping on anybody's shoes. My name is Ashraf Laidi, and I'm based in London. I used to come to these shows when they were first created. I think this was the longest running any sort of trading show. It started in 1999, I believe, or 98, and I started attending these. About 1999, it was all about the .com. Everybody was how to day trade. And then FX didn't really pick up in these kind of shows up until 2002, especially after the dot bubble burst. FX started becoming exciting. 2006, 2008, I left the US and I went to London. And I joined the broker, you know, an FX broker, and I was an analyst. I was doing TV, I was writing, I was sounding very smart when I was writing. I was sounding very smart when I was predicting. I was sounding even smarter when I was trying to explain things that have happened in the past. But the problem is that what I really wanted, as comfortable as that job was, I wanted to really find, you know, dirty my hands and get back to trading, which I had started. I did my first ever FX trade was actually in May 1997, and it was on the phone, and it was in dollar yen. And I said to myself, if this is a winning trade, then I will continue to do it. And it was a winning trade. And then I did all sort of trading. When somebody tells you, how long have you been trading? And you say, I've been trading for 5 years. What kind of trading have you doing for 5 years? And in those 5 years, you can go into 3 different schools of trading. And they will be influenced by what kind of losses you've taken, what kind of people you've met, and so on and so forth. So after working with all these firms and doing the writing and everything, I started really to trade more seriously and more consistently in 2000 and really during 2007, the time that I wrote my book, which is Currency Trading and Intermarket Analysis. Believe me, listen, the time has come and gone when I promoted the book, and that was in 2009 Expo, so I'm not going to be promoting the book, but it is something that I worked a lot on. I've got 6 copies here. This was written in 2007, it got published in 2008, and I wrote it during the crisis. I'll give you a small anecdote. I actually, do you remember what happened in March 2008? Anybody know what happened in March 2008? So if you've watched The Big Short, the film, that guy, the drummer, what's his name, he started finally making money, and all of the guys who bet on the markets, they start finally seeing the light. And I believe, when was it? It was, It was around February, March 2008. So basically in March 2008, that's basically when JP Morgan came in and they bailed in and they bought Bear Stearns for $1. And actually I was in a company in Broadway right before, one block before the bull, and I was writing my book and I was in chapter 6, and it was a Sunday, and Reuters, and usually it's dead, the market opens around 7 p.m. For Asia, and I was looking down, and the Federal Reserve Bank of New York building, that one with the brick building, all these limos, there were like 7 limos around 7 p.m. And when I left, because I was trying to finish my book, when I left around 10 p.m. they were still there. And that's what they were trying to do. And then they all moved, they moved them to Bear Stearns in Midtown to try to see the positions and how to work them and everything. It was a very, very exciting time. But what was more exciting is when you start trading and you start taking a loss and you're starting to say to yourself, I am sitting on a loss. What do I do? Do I get in? Do I get out? Do I tackle my thinking? You know, do I throw in the towel? And there was some very, very good things were said in today's panel, where it was chaired by Dan. And a lot of important things were said. Take the loss if you need to take, and so on and so forth. So what I'm going to do, this thing called Intermarket Analysis, this book which I wrote, came out 2008. There was nothing about technical analysis. There was nothing. That book, it just basically told you which currencies usually do well when the stock market does badly or does well. It also showed the correlation between the commodities and FX. But this time what I'm going to try to do, I'm going to try to take this thinking and I'm going to kind of relate it towards technicals, because it's very important. And the more you trade, for me, 80% of my decision making that goes into a trade, it's commanded by technicals, okay? And I don't want to make it sound so easy what is technicals and casually speak about it, because technicals is like a university or it's like a supermarket. It has many aisles, okay? There is the classical technical analysis, there is the pattern analysis, head and shoulder, double tops, and so on and so forth. There is the trend lines, moving averages, there's candlesticks is another school, and then there's what you call the Western type analysis, which is the lower part of the chart, which is indicators, which sounds so mathematically interesting. It's, it's the RSI, it's the MACD. Which MACD do you use? Do you use a 933? Oh, he uses a 1055. Oh my God, it doesn't matter. Let me just give you just a small thing about these indicators. I'm not going to tell you they're all backward looking, they don't work. No, they work. But you know what? You need to know how to use them. You need to know how to get used to them. You need to know when is the signal wrong. Because technical analysis, for me, the one that works, I was subscribing to a service by many, many hedge fund guys and by many big guys, and they keep things simple. They look at the overall trend. Technical analysis is what you can see with the naked eye. What stands out at you. The more you try to look in and deeper and deeper and deeper, the right to make an effort to justify your losing trade or your trade for staying, the more likely might be something wrong. And by the way, just let me, so the stochastics, if you're looking at your trading platform, you have the CCI and the RSI and you have all sort of kinds of moving averages, but at the end of the day, and there was all these formulas that was being put, but the output is telling you that something is usually overbought or it's oversold. And people are obsessed with this thing called a bearish divergence, where they see the price going up, but then they see the indicator going down. So they said, oh, the indicator does not agree with the price, so I have to sell. No, because it depends on what time horizon you're looking at. It's the way you interpret that. It's the way you interpret that indicator. And that takes time. But what I'm going to go into, I'm going to open this later. I'm going to go into this. So for me, I'm going to focus on something called the Gold-CNY-USD Triangularity. Yes, I know it sounds exciting and everything, but here's the thing. When the US talks, trade in China started, Trump is trying to penalize them, and then he upped the ante, and then he's going to add, I'm going to add 200 billion, and so on and so forth. But there was one important thing, which is as the US dollar was pushing higher in the summer, okay? So do you remember what happened in the summer? It's trying to get you a perspective. What happened in the summer 2018? There was the World Cup. The United States did not qualify for the first time in a long time. There was the euro was falling. Everybody was talking about Italy, and Italy is going to be, Deutsche Bank is going to be the next Lehman, and so on and so forth. The euro is going to go towards 110. But as the dollar was pushing higher, and I was making money in going short the dollar and going long euro and sterling. As I was closing my losing positions, when the euro dollar came down, I was trying to say what gives. I did a lot of technical analysis, a lot of analysis that tells me that the pattern of this rebound in the US dollar is going to be temporary. But how long is temporary? There's a famous saying that there is nothing more permanent than temporary. So what happens? I think it's a Greek saying, whatever. There's nothing more permanent than temporary. But then, and I strive to looking at it, guys, and if you watch, so I have the Bloomberg platform, which I'm going to put in a minute, and it's institutional, and you pay a lot of money monthly to check it out, and sometimes I look at Bloomberg TV, I look at CNBC, and every currency strategist who works for HSBC and JP Morgan and everything, we said, yes, the US dollar is going to break above the 7 level against the 1, meaning the US dollar is going to push higher. And I'm going to talk about the fundamentals just a little bit, but the rest is going to be technicals. And it's basically what Trump said, he told his team, listen, you're going to negotiate. You're going to have the good guys and the bad guys. The good guys are the Larry Kudlows, the Mnuchins, the Treasury Secretary, who are optimistic, who never say anything bad. The bad guys are, the ones who are very tough, is Wilbur Ross, Lighthizer, and maybe Trump. Bad cop, good cop. Depends who you hear what from what. And some of them say, yeah, we're not there yet. Oh, no, we are there. And we're almost. But then what you hear towards pick up is that the Chinese, they're being kind of pressured or forced, yes, that they should not depreciate or weaken their currency beyond a certain level. And that level has increasingly becoming 7. Why? Why? Because I have an inside person in Beijing? No. Because I'm so smart? No. Because I let the charts tell me this. And the chart basically, so here is a chart, and it doesn't matter if this chart is from 3 weeks ago. It does not matter. But here is a chart, and the reason it's from 3 weeks ago because it's from an expo, from a presentation that I did in Dubai three weeks ago, but it still works. And the first and the upper panel is the US dollar index. The US dollar index, which is basically, it's an index that represents a basket of 6 currencies: the euro dollar, the yen, the pound, the Canadian. Okay, so in this order, in order of magnitude. And so it's the euro, the yen, sterling, Canadian, Swiss franc, and the Swedish krona. Okay, euro dollar part of it is 57%. That's why if you take the euro dollar and the dollar index, they're slightly inversely related. The second one, guys, the blue one, is euro dollar. Okay, and by the way, this is the daily chart. The third one is the dollar versus the yuan. So when that chart, the red graph, the third one, when it goes down, the US dollar is going down, meaning the yuan, the Chinese yuan, is strengthening. And the last one is gold, okay? Yellow, it's gold. When it goes up, gold is up. Usually gold is down. There's nothing new about this. You all knew this. The thing for me, I am looking at this, and I'm not going to say, oh, look, as the USDX goes up, euro dollar goes down, and no. It is which resistance in the dollar index, or which support in the euro dollar, or which resistance in dollar yuan, or which support in gold really matters, meaning which level really matters that effectively stands in the way of further dollar gains. And for me, this is what you call an intermarket or kind of holistic approach towards the market. And increasingly, when you mix the fundamental talk and the recurring failures, here's what you'll notice. And I'm going to go and look very closely. Those of you who are sitting there, look there. Those of you who are sitting there, look there. Those of you who are sitting there, you have a lot of choices. You can look here, look over there. Why are you looking at your phone? Why are you looking at your phone? I'm going to come in today. I'm speaking at 5:45. 6:30, I'm going to be out. Tomorrow night, I'm going to go to the plane. I'm going to go to London. You're not going to see me again. You can look at your phone 5 minutes later, 7 minutes later, 10 minutes later. What made? Sterling. Yeah. Okay, please remind me to talk about sterling. Actually, you don't need to remind me because I've got a beautiful chart about it. Okay?
Crazy move today,
it is a crazy move. Did you get in on it or no?
No, I was not.
Why not? Because you were busy watching us.
I was paying attention.
Because you were busy supposedly watching the experts who just talk, and they're not even trading it. And you probably made more money today than... Okay, never mind.
Probably.
Yeah. So... No, I'm not. This is how I usually speak. I usually speak faster. It depends if you want to stay here after 7 or until 7. Okay, so here's what you see. So this is the same chart, and the emphasis is different. So what you do, so 7, this is the 7 level, and we didn't even go near it. And so in here, guys, in August of last year, the peak in dollar index, yeah, so it was a peak. Euro dollar was a bottom. Dollar yuan was a top, and gold was a bottom. So there is no secret. It doesn't take a genius for somebody to say, oh, the same lows in gold coincide with the high in the dollar yuan and the bottom in euro dollar and the top in the dollar index. You're saying the same thing. You're saying, oh, here you're saying the glass is half full. Here you're saying it's half empty, blah, blah, blah. Fine. But the key, ladies and gentlemen, for you, well, in my case, is which level is going to matter. And here is what I'm going to do next. So in here, For me, I give it away. I'm saying this is what matters, 6.97. And then you go in next. Once again, the same level. Market has memory. Some people say market has no memory. Some people say do. August, 3 months later, market goes down, goes up, and it stops. And then it goes down, and it goes back up, and it stops. Why is this important, ladies and gentlemen? Because the low, the corresponding low, corresponding to this high in dollar yuan, in the euro, okay? Here it's lower. You understand? Do you see it or no? Here it's lower. In dollar index, it's higher. And the cusp of this presentation, ladies and gentlemen, is for me to say, and why is this important? Because if you're fixated on this thing, okay? If you're fixated in this, and if you have told yourself this is the ultimate resistance in dollar index, how many of you actually trade the dollar index? How many of you? You can trade it, you can actually trade it with the trading platform, with the futures. If some of you said, oh, this is the high, and then you touch this, and then you go up, you say, oh, it broke, I'm gonna buy. And the same thing, if you regarded this as the big low, and you retested it, and here I remember I was in Egypt, I was in Cairo, there was an expo here around the end of October. We broke this 112.80, and you said, that's it, all hell broke loose. Big support in euro dollar broke. But guess what? The language of, obvious language of naked eye, of technical analysis, which is higher lows in gold, it continues to prevail. And more importantly, all of this was a higher high, this was a lower low, but this commanded, and this was still, this is slightly above this, but it did not break above 7. And why do I care about this 7? CNBC doesn't tell you about 7. Bloomberg doesn't tell you about 7. Whoever Twitter feed you follow, whoever Forex Factory or Daily FX or whatever, they don't usually tell you about 7. Why? Because they're brokers or whatever. They don't, because you cannot usually trade dollar yuan. And if you trade dollar yuan, the spreads are so high, it's not exciting. So they're going to talk to you about this, about that. All of this stuff, listen, I formed the first ever 24-hour portal, FX portal in the world, okay? It was the first. It was not Daily FX, okay? It was forexnews.com, it was a company called MG Financial Group, and I started in January 1999. Okay, I know the guy who started Daily FX, he was owned by FXCM, and they started in 2000. And then they put Boris and they put Kathy in it. But I started that, and it was the first one that was manned by 4 people. Owanda, Olsen and Associate, they had a 24-hour portal. They had a portal, but it wasn't 24 hours. So I know what I'm talking about in that respect. And when it comes to writing, yes, you can write. Yes, you can do that. But a lot of these websites, it depends who they are backed by. And how many of you, when you go to the websites, they say 20% of our clients are long euro dollar? You know what I'm talking about, when they show you that little pie. It's very popular and people say, oh, this is great, 20% of their clients, so 80% are short, so I'm going to follow the herd. But you try to be smart. Oh, actually, I'm going to do the opposite of what the herd does, so I'm going to go the opposite side. But you know what they're doing? They're the casino, they're the house. They're giving you something to get you to trade. Okay? But for me, now, I have my own signal, I have my own website, ashraflaidi.com and everything, but I'm telling the people why on earth I am watching 7. 7 because each time it goes to 7, when the Chinese, they put the fixing, when they announce the Chinese yuan every morning, which is around 1 a.m. London time, so it's around 8 p.m. New York, except in these 2 weeks where the difference is 4 hours because the US added and UK is going to add and Europe is going to add 2 hours, 2 weeks later. I know I'm putting a lot of information. I am bamboozling you with this speed of information, but I'm not doing it because to bamboozle you, because I just want to, give you a lot of information in this little time. And what it is, when you see each time the dollar is about to go to 6.895, 6.99, it backs up. And the Chinese are aware of it, because if they allow the dollar to go above the 7, they're being accused by Trump that they are shortchanging the US administration via a very cheap currency. So let's do this exercise again. So here we are, I said this, here we are, 7 again, 7 again. And what's this? This corresponds to a rising low or a rising support in gold. Today, so this is today's chart. Gold, for those of you who were excited about 1350, for those of you who bought at 1330, when maybe they got margined out or stopped out at 1320, but the thing never broke the support. Daily chart, this is what it looks. For me, the naked eye. There is a support, there is a support, there is a trend line support, okay? If it breaks 1293, it doesn't matter, okay? We're probably looking at 1277. And then the weekly chart, for me, I do the technicals for the RSI, and there is still a higher lows, and it's still speaking the language of I'm holding up. I'm not going to bore you with the fundamental stuff. If this was a macro fundamental thing, I'm going to tell you that 2 months ago, the central banks of the world bought the biggest increase in gold bullion, led by who? Which country? Which country bought the most? Which central bank bought the most gold? Who said that? Yes, exactly, Russia. And they did it in a way without using dollars, or they basically bought gold to authorities from the not the refineries, from the mines that they have in Russia, you know. And so that's what we're seeing. And why are they doing it? And then we can have a whole different 45-minute presentation about emerging market and about the debt and about the crisis and why people are going to gold, but we're not going to bore you with that. What matters is what's happening, and what matters is this chart. In the meantime, the dollar index, okay, there is the daily chart. What do you notice about this? So this is the daily chart, and this is the same chart. Okay, so this is the same chart. So in here, in November of last year, the RSI had a peak here, and then it had a lower high. And this was the peak in the price. I'm going to take you to the next price. Boom. And then market has memory. It goes back towards 97. It fails. It comes down. It goes up. It comes down. Oh, the RSI is pushing higher. When the RSI goes to 70%, you know 70% overbought, so, you know, 30% oversold and so on and so forth, but the market realizes and it backs down. And the question and the core of this presentation is when the dollar index goes up and it's about to break the upper circle higher, that's when the time when you think this is it, euro dollar is going to go towards 110 because the Europeans are worth nothing, and because the Europeans are lazy, and the Europeans are becoming like the Japanese, and they hide their troubles under the desk, and Deutsche Bank is a walking dead bank, and the United States is much better, and then you start to rationalize everything and blah blah blah, but this is what matters, okay? The market goes up 2 steps up, 3 steps down, 4 steps up, 4.5 steps down. Okay, and then you have, if you're not convinced by the daily chart, here is the weekly chart. Yes, I know it's the same thing as gold. The gold was showing you the RSI higher lows. This is lower highs. Okay, so basically, let's get into it. Sterling. So for me, I've been living in the UK for 10 years. I don't need to be living in the UK to give myself credibility, to show you that I know a few things or two about Brexit, but I'm an avid fan of the important political shows that are about Brexit, that are exposing the cluelessness of the politicians on both parties, on the Labour Party, they have no idea. The average age of politician in the United Kingdom, they're like 32, 31 years old. Everybody's trying to go run for becoming an MP. They speak well, looks good, speaks fast. The younger they are, actually, the more likely they are likely to succeed. And then they fill their resume 3 years, 4 years, and then bam, they go to the private sector, and this is how it's happening. This is what's going on. This same thing here with the congressman, but it doesn't matter. The average age is much higher. And it is becoming, just a few words about Brexit, because this week there is a very important vote, and even if this vote is going to get voted down, there's one or two conclusions. I'm not usually by nature what's the word? Somebody who is an optimistic, eternal optimistic. What's the word? There's an expression. What is it? I'm not usually a Pollyannish in terms of the markets, in terms of this, but I'm going to say that England, the UK, cannot afford a hard Brexit, i.e. a Brexit without a deal, okay? I know it sounds complacent. I know it sounds like famous last words. The expert last week told us that they're not going to have a hard Brexit. They cannot afford to have it. So I say that if they're going to have, either they're going to delay the exit, Or the other thing is that they are likely to have a second referendum. And a second referendum, they're not just going to give people another chance and say yes or no, but it's going to be a referendum usually of 3 questions. Accept Theresa deals as it is. Exit with no deal, which is huge, hugely ugly. And the third one, no Brexit. But it doesn't matter all of this. What matters is this chart that I'm going to show you, okay? And I'm going to show you what we were doing for our clients and so on and so forth. So this is a simple, innocent sterling dollar chart. It's daily candle. There's nothing. RSI 14 underneath. Okay, yes. When you get here, you come down. When you get here, you come down. Oh, this is very bad. Lower highs, you know, and then you come in here. Oh, it's not exactly higher lows. It's bad, but look at this. Some people say it's an inverted head and shoulder. Some people it's a W formation. But keep looking at it. And now let's look at this. This is the same chart with the moving averages and with my drawings. And this chart, this tells you, this is the candle that the gentleman here was sitting here right in the front, that he said he missed, okay, here. But if you believe in symmetry, if you don't believe it, then you're a believer now. I mean, you can't make this stuff even if you wanted to. What is that? What's the expression? Yeah, you can't make it up even if you tried to. So this is the sterling low. You've got an intermediate low here. Intermediate low here. Yeah, this is an important level. This is the candle tail or the shadow, but this is the closing level. Okay? And this is what I alluded to when I was sitting here in today's panel. If your expert or the guru that you follow told you that the support is here, okay? This is why you have to be careful. How many of you attended my panel thing today, this morning? How many of you? I basically said, I said, I don't want to sound like the guy who is the expert or the expo who tells people don't use a stop. But if you're going to use it, you've got to be careful because you're going to be easily fooled because the market with the high frequency trading, with the algos, with all the volatility, there's so many times where stops are going to be tested, they're going to be embraced, they're going to be flirted with, they're going to be cheated on, they're going to be doing, and then they're going to touch them and leave them and they won't be given any meaning. I.e., there's going to be so many false breaks. Okay? And this is a beautiful example right here. If the guy told you the stopper was around 126, guess what? The market went 200 pips below. But who had the final word, i.e. the daily close? We went back up. Okay? So this market, so this was bad, lower lows, but here is what the market is. And for me, every chart has the 200-day moving average or the 200-week moving average. It has the 100 and it has the 55. Do you believe in golden crosses and death crosses, Ashraf? Not all the time. It depends. It needs further studies. It depends on the market. So I'm not going to even refer to that, which is basically when the short moving average goes above the long. But look at this beautiful thing. And I know this is a curvy, not a straight line, but this is the way I approach it. I'll give you an example. So AshrafLaidi.com, so we've got to just give you an idea. So, okay, this is the promotional part of this. You know, be careful. This is where I put in my salesman thing. But so I've got the premium signals, and this is the sterling. So sterling, this is the chart that we had, 14th of February. So just to give you an idea, I have a lot of clients in Arabic. I speak Arabic. I'm Arabic, so I put in some stuff in Arabic. And if you click this chart, so this was the rationale for getting back in on the 14th of February. But never mind that. Here's where we got in. So the 15th of November trade, I put in the last 4 or 5 trades. We got stopped out. Then on 16th of January, we went back in. We bought between 128 and 128.30. It's considered 128.30. It hit the final target. It hit 129.70. That is in English language. It's called 140 pips. Okay? And then we were actually lucky enough where when we touched 129.70, we didn't jump back in and we bought a 129.70 or 129 or 129.80. We took it easy a little bit. There is a rationale for it because the weekly RSI was way overbought. The daily RSI. So just watch what I'm going to say in the next 6 minutes now. Okay, it's about how you use time horizons. So just forget that. So basically, we made 140 pips. We went all the way towards 129.70. Okay. We made the money, felt good about ourselves, but then we said, is the market overbought? The weekly chart, the weekly RSI, was not overbought. It was actually, as you look at it, it was breaking a trend line resistance, and it was around 50%. It was far from overbought. This is the weekly. But the daily was very overbought, was 70. What does that tell you? What does that tell you? And you have to try to use this exercise in your brain. If let's say the longer term horizon is overbought, but the longer term is not overbought, it's around 50%, it's around 40%, and technically it's looking well. And the shorter term is overbought, what does that mean? That means in English the market is going to want to have a pullback, but eventually it's going to push higher. I know, it's a very dangerous word, eventually. Between the E and the Y, so many things happen. You know, but this is the reality. So what we did, we didn't do anything. We waited for the market to pull back. This was the 21st of January. And 24th of January, when the market basically pulled back, so listen, we got out at 29.70, 16th of January. 5 days later, the market was down towards 128.80. We went back in, and then we got out. We didn't wait until 31.40 to get out. We got out at 128.80. The difference between 128, we got out at 130.80. And we got in at 128.80, it's 200 pips. Now I'm feeling confident. Wow, we made money, we closed at 131.40. Now we get stuff, because the market is pushing higher, and I'm really believing in this sterling trade, and I want to buy it, but the setup of the RSI between the daily and the weekly is not that easy. So I'm saying, I'm just going to get in. And then I wrote a note to the clients and said, this service doesn't tell you anything about size, but what I recommend, or what I do not recommend, because you have to be careful with the language, is that if you made money in the previous 2 trades, and the third trade you want to buy, or you came late at the trade, because a lot of people do that. This is the psychology. You know, they hear me brag on Twitter that we made money on the first trade. They don't get in it because they don't believe in me. And then they hear me brag again, because I don't brag, I just say we made money. And they said, oh my God, Ashraf is on a roll, he's got a hot hand. I'm going to join him the third time. But you have to realize that if I am buying something and it's going up, you have to know that you're at risk, because the market is up, and it is, what I said earlier this morning, it is close towards touching a resistance, so it will be more vulnerable to an obligatory pullback. And that's why I tell you, if you usually go with 1 lot or with 5 lots, with this, you don't go with 1 lot or 5 lots. You go with a fraction of that. Do you understand what I'm talking about? Because size is important. Do you understand? This is important. If you don't master this, all of the stuff that I just said in the last hour doesn't matter. Because like the lady here who said, or Dan, they said, you might have the greatest idea on earth in making a trade, but the time may not be on your side. And that's a common mistake that I used to do. I used to basically go into the market, and I was always very fast. I was fast. I used to interpret the market very fast, and once I got stopped out, that's when the move used to happen. And I'm sure it happened to every single one of you. I'm sure that it happened to every single one of you. But, so this is a great example of it. So let me tell you what we did. Please, listen. Okay, this is the time when, 45 minutes of presentation, people get fidgety, I have to see, I've got a text from this one, going to have dinner. Forget about all of that, okay? Like I said, tomorrow by midnight, I'm going to be out of a plane. You won't see me. Well, you will see me, I mean, if you're going to contact me. But this is very important, because you need to know a lot about sterling in the next 48 hours, actually into the end of the week. So listen carefully. I bought a 134.20. I bought a 130.50. Are you listening? For me, because I have a service and I have clients, even though I don't always use a stop for me for my own trades, for the clients, I have to give them a projected profit that is usually almost twice as much as my what? As my risk, as my loss. 2 to 1, usually. So I told them I'm targeting 134.20. Where's the guy that is supposed to come and tell me you have no time? He's not here anymore. That's excellent. That's very good. So I'm just going to take off my jacket. And it's really getting hot here. All right. So basically, what I did. So I'm going to walk you through the chart. Okay. If you allow me, just going to go here, or you can talk among yourself, or you can ask me personal questions and all of this while I'm trying to log in. Do you have any questions about the market, or about food, or about England while I'm doing this? Anybody? Well, okay. I can tell you, you want to guess, and if you guess correctly, then I'll give you a 1-month free subscription to my service. Everybody said, oh, really? You have a service? Tell me about it. And I said, I thought you'd never ask. So do you want to do that? I'm sorry? Who said what? And the person who said Algeria, she's probably Algerian. You're not, I'm from Algeria. Do you know where Algeria is? I will give you 1 month free. And the way you answered it, I'll give you 6 months. But I'm going to check your login if you really checked into the website. Yeah, I'm from Algeria, which is in North Africa, which is undergoing heavy political unrest. The president who had 4 terms, he wants to stay for the 5th term, and he hasn't spoken to the people in 3 years. And he's 83 years old. But anyway, it's not Venezuela, it's Algeria, by the way. So please, come in. So I'm going to show you the live chart of sterling dollar of what we did. But basically, yeah, that's Bloomberg. Yeah, it's Bloomberg terminal. Never look back unless you are planning to go that way. Good one, isn't it? Okay, so I'm going to go into the chart in a bit, guys. But, okay, guys, there's a lot of activity. Please listen. Wait, let's settle down. Okay. So in this trade, the current trade, it's in progress. What we did, we had to move. We have to lower the stop. Okay? We had to lower the stop. And no, you do not need to have a Bloomberg platform to be able to do well in the market. No, you don't. I do it because it enables me to communicate with people in the industry, to do a lot of things, and I can do intermarket analysis, I can do charting of macro indicators and so on and so forth. Never mind. Let me just take you to the chart, okay? Please listen. Just focus here. Let's go to this one. I mean, look at this move. Look at this move. Wow. I mean, you can't make this up even if you wanted to. Look at the market. It touches this, it goes up, it touches this, it breaks, it retests, it goes up, and it jumps higher. Nice. Now, let me tell you, the last trade that we opened was 24th of January. Do you remember where was the 24th of January? Okay, I remember. It's the day before my wife's birthday, so it was all about what to buy her, how to buy it, when to plan it, how to plan the cake, how to do this, how to do that. It was not a low-stress day. Well, you're supposed to do it with love. Yeah, I know, but it's, love without stress. You kidding? No such thing. So basically, so here we are. So the 24th of January, I had 2 consecutive trades. I'm confident. I'm good. I buy a 130.50, 24th of Jan. Where's the 24th of Jan? The guy tells me, oh, it's the one before the 25th. Okay, so 24th of Jan. So here's what we do. So this is 24th of Jan. Oh my God, you bought right at the peak. You bought a 200-day moving average. So here's what the market did. We bought here a 130.50. You see what the market is? 130.50. It pushes up 132.12. Now, I do this disclaimer. So I have the signals and I have a video in Arabic and in English. And I describe to people what to do with the existing trades. Even though these trades, they all go for 180 and 200 pips. For 180, they target 180, 220 pips. Now, I'm telling the client, you do not need to wait and do nothing up until 220 pips. You can take 20, you can take 30, and then you can back in. But like I said this morning, it's really how you get in. You get in, you go with a testing trade. You go in with 1 lot, 0.5, 0.9 lot, 1.2 lots, and then as it goes in your favor, you scale up, and then eventually you will take money from your previous trade. It doesn't matter whether you're closing after 40 pips, and I told you don't get out until I didn't tell you don't get out at 220 pips. I'm telling you that my ultimate target is that final one, and you can do whatever you want. Because for me, I often get out after 30, after 40 pips, but I have various multi-time horizon trades. So listen what happens. This is an example. And so what did we say? We bought here 30.50. The market pushed. So after we bought, oh, Ashraf, you're crazy. You bought a 200-day moving average. The market, you see the chart? It's testing the 200-day moving average for the first time in what? For the first time in a long time, right? So I'm not going to bother. But what happened? After we bought it, we went up from 130.70 to what? How much is this? How much is this? 30.70 to 32.20. That's like 150 pips. Beautiful. And then it comes down. Did I take profit? No. Why? I'll tell you why. Because I was targeting 134.20. Why was I targeting? Why did I say the ultimate target at 134.20? Anybody knows why? Because I had to put a very low stop. Do you understand? And I had to. Do you understand what I'm saying or no? Because I could not put a very high stop, because if I put a high stop, that was likely to be to be tested, and while the market is not even thinking about coming down, it's just taking a breather. Like I said, the market is $5.6 trillion a day, doesn't care where your stops are. In order for it to continue to go up for the third consecutive day, it needs to come down and take a break. It doesn't care where your stops are. Okay? So what happened? What did I do? My stop was at 27.40. Yeah, it's very low, I know. What? 27.40? You're boarding a 130.50? That's what? The 300 pip stop? Are you crazy? What are you targeting? You're targeting, yeah, and you're targeting this? 400? Okay, well, here's what happened. The market came down. The initial stop was what? Where? It was 128, right? Because here's what I said. On 24th of June, I said, lowering the stop to 127.40 from 128. Why? Well, why did I put 128 when I got in? I got in here, I put in 128, which was, I'll tell you what 128 was. Here, okay? What did the market do? Guess what? We bought here, the market came down, came down, came down, came down. It saw 128. It knew that AshrafLaidi.com had a stop there, so it wanted to screw me and then go back up. But I said, hey, you think you're better than me? Huh? So I lowered it. Some clients were very angry. Some clients said, you can do whatever you want. I don't use stops. Some people said, what is this? This is a joke. What kind of service is it? You're already putting a stop at 300 pips. You're gonna... I said, I don't care what you think. I said, this service is $110 per month. I give you the charts. I give you the directions. I give you the analysis. And you're going to criticize me for lowering the stop? Do you actually use a stop? Well, I have an automatic trading system, and I put the stops and I forget about it. I said, okay, that's fine. So don't use the service. But this is what I do. I made you money in the first trade. I made you money in the second trade. I want to make you money in the third trade, but you have to work with me. And we're not going to lose the trade just because the market, because oftentimes, I mean, when we go stopped out, we get stopped out. But sometimes we get stopped out by 3 pips. And I'll show you an example. This is real, guys. This is real. There's no if and that. We're not talking about, Bernanke and Yellen and Carney and Powell and this and that. This is real. And this is what's happening. And you should see the emails that I go back and forth with the clients. And then, so what did I say? 128. Where did the market go? I'm going to take the cursor to the candle. Where's the low? Where's the low? Where's the low? 127.73. Thank God I lowered it beforehand from 128 towards 127.40. And what are we today? We are. The high was a 133.50. Where did we get in? 130.50. If we got in at 130.50 and if we got out at 130.50, how much is that in English? If we got in at 130.50 and the market went to 133.50, how much is that? 300 pips. Did we get out? No. Ashraf, now you're really becoming very greedy. Why? Because oftentimes we close the position before it hits the ultimate target, but because I was so confident here and here, I decided not to take out, and I'm still waiting for 134.20. And when but then in the video that happened, and that following Monday, I said, you can realize, you can lock in gains and so on and so forth, but we're not moving it. And that's basically what I do. And then, as the market came down, the stabilization or the low was not here, it was here. And today, where are we? We went towards 132.89, and we are 132.20, and the trade is 170 pips in the money. So this is a small example of the life of a trade, the life of a possibly losing trade. It was losing. What do? Do we take it? Do we don't take it in? I'll give you another example. Okay? I'll give you another example. Euro dollar. Can you please listen? I know you're about to part ways in a few minutes, but okay. So basically, we had a long in euro dollar. This was a bit. We had a long in euro dollar, so we stopped out. But here's the last trade where we got stopped out. Listen to this. This was 28th of November. Very long trade. Can you please listen? You're looking at each other. You're this. Todd Gordon is speaking behind me, very popular man on TV. I don't know why they put him the same time as I am, but thank you very much for coming in. He goes on CNBC every other hour, and I'm back in England. They put me the last one with him. But thank you, so I appreciate it. Probably half of you who are coming want to watch him first, and then you came here. But it's okay. I'll pretend that didn't happen. So basically what happened is that, look at this trade. And I'll give you another example, guys, about this service, okay? That we don't always pull the trigger. We don't always get out in time. But here is an example. This was the longest trade. By the way, we also do trades in the Dow and the indices. So, you know, actually we have Ripple and Bitcoin, and it is like watching paint dry. It hasn't moved, you know. Really, no, really. I mean, we got in here. Here's actually Bitcoin. There was a nice rationale here. It's still testing this. You know, the Dow, for instance, we had a very good December. I was one of the most bearish people, but in December we started to buy. Okay? We started to buy. We actually had a few longs here in the Dow, and the last long was the 5th of March. We made 400 points, 400 pips. We actually got up a bit early. But going back up, this is the Dow, and this is the rationale. Okay? Here's the Dow daily, weekly, VIX, higher lows, and then there's all the stuff, and then there's in Arabic. We don't do Chinese yet, but you know, if you pay me the right kind of money, we can do anything you want. And then there's gold. But why am I scrolling down? Because I want to go to euro dollar. And euro dollar, so this trade was done on, guys, can you please listen? If you want to talk, speak louder so everybody can hear what you're saying. You go ahead, play among yourselves. So do you want me to join you later? Yes. Okay. You're very happy. It's the last session. I'm going to stay here until 11. Okay. So basically, 28th of November, this is when basically Jay Powell said that we are near neutral. And that was very dollar negative. I got excited. We bought a 113.50. 28th of November. 28th of November, everybody was busy, Thanksgiving and all that stuff. 28th of November, it was around here. 1350, the market went to 115.78. The trade was 250 pips in the money. We didn't take any profit. We didn't. Eventually, here's what happened. Where's the low? Where's the low after the ECB? 111.77. Where was our stop? Did we get stopped out? We did. But Ashraf, why didn't you move it down? Why didn't you move the stop? Because I already moved it. So what I said, so what it was, just to remind you, this was right after the ECB on Thursday before the NFP. So what did I say? I said I'm going to take the loss, going to take a stop. Yes, we were up 240 pips, and then we got back in after that 20,000 of a joke of an NFP. And we went back in, and the trade is in the money. So basically, I don't know if in this 45 minutes, how much time do we have? Time is this down or time is up?
There's a 6:45 session.
Okay. So basically, so this is how we are trading it. This book, I have actually 5 copies left. And yeah, you can find me on Twitter. There's the website, ashraflaidi.com. And the gentleman said there's a session at 6:45. So we have a few questions and answers to get to know each other. Any questions?
No.
Yes.
Right here.
Yes.
Can I get a copy?
Can you get a copy? Do you have any cash? You do? Okay, we can talk. It's actually, this is not, okay, the latest edition, it looks different, but it's not a revised edition because I didn't change it. Yeah, and yeah. Okay, but I'll give it to you with a nice autograph that costs, with, you know, with a $20 premium. The picture, oh, no, that we're talking about. It's 70, I can leave it to you just for 100 with a picture. Okay, guys, come on, any more questions? Yeah. Yeah.
In your book, you mentioned the gold.
The gold oil ratio. Yeah, that's a little bit too, I mean, we have 5 minutes. I don't want to try to impress you by talking about it, but I actually talked about this book in 2007, the gold oil ratio. So when the gold oil ratio starts to push higher, I can explain to you in the economic way or in the technical way or in the fundamental way, and when, well, or the risk way. And usually when gold starts to outperform oil, that's usually bad for equities, because if you see it, equities, they have more of a high positive correlation with oil. Okay? Actually, I'll give you an interesting thing. If you see the Dow down 250 points, or the Dow is down 280 points, but you see the XLE or the USO or oil is not really breaking down, then you can see that that decline doesn't have legs. But we can talk about that until tomorrow. Yeah?
Do you have a cable open?
Sorry?
Position?
The cable, yeah, it's open.
What are you going to do tomorrow?
What am I going to do tomorrow? What am I going to do for the clients? What am I going to do for me? Because it's very different.
Your money.
With my money, I have a few longs. Some of them are higher. They are in the red. I have a few of them that are, yeah, that are around 129. I'm going to sit, and I'm not going to do anything. You know why? because the trades that I have, they're relatively small. I've reduced the exposure compared to the account. And that is one of the best ways. I just want to tell you something, guys. I don't want to confuse you with this. So many people, probably not for me for the 645 one. Okay, so what it is that today you heard the reason, they said reason sterling went up is because Theresa May was spotted going to Strasbourg. Somebody spotted her. But the guys who believe in technical analysis, they don't even care. They don't even know who Theresa May is, where Strasbourg is. They just said that the support hit, it tested, there are higher lows. So there's a little bit for everyone. But eventually, I do think we're still going to see 135, and we can even see 142. Good questions. Any other questions? Any of the answers? Okay, you want the book? Come, get in line. Everybody pretend that you're standing in line, okay? So you create an interest. Thanks very much, guys. Have a good one.